Good afternoon and welcome to BizTech's Asian Midday Market Watch. Kelvin Wong, Senior Market Analyst from Oanda, joins us as our guest today on the 13th of September. Now, Kelvin, great to have you on the show.
Hi, good to see you again, Brian, and good afternoon.
Now, Kelvin, before we get your insights, we're going to take a look, as always, at cryptocurrencies as well as how regional stock markets have performed. We're going to start with cryptos with Bitcoin at 25,914. It's up 0.62%. Ethereum is at 1,590. It's up 0.51%. Now, looking across the regional stock markets, we start close to home. The Straits Times Index is down 0.06%. Bursa Malaysia is down 0.08%. Shanghai is down 0.82%. The ASX All Ordinaries is down 0.66%. The Nikkei bucks the trend, it's up 0.14%. The Kospi, the Hang Seng is down 0.02%. And rounding out the numbers with the Kospi, which is down 0.09%. Kelvin, your view on market performance in the first half of the day?
Yeah, so if you look at the current situation in our benchmark Asia stock indices, it's more downside rather than upside. So the reason for this downside is actually there's two factors. The first factor is definitely the negative feedback loop that was actually being filtered through Asia today from the US session. So what we see over here is that the US session has almost across the board negative, especially on the US tech stocks. That is actually have a show off and being the worst sector performer due to the Apple, we call it the lackluster performance of the share price of Apple after the we call it the conclusion of its this Apple key flagship event where they showcase their latest iPhone models.
Now, overall, in terms of the launch event, what do you attribute to the negative price reaction for
Yeah.
Apple stock?
So it seems to me that Apple stocks has fallen to that particular namesake where prior to the event there was a bit of hype up on the share price. Then thereafter event is actually kind of a sell after the news. So Apple actually faces this omen yesterday. So there was actually a pretty much drastic negative reaction after the conclusion of that event. So the Apple share price is down negative 1.7, pardon me, negative 1.7%. But that reaction over here is in terms of technical analysis, it actually failed to cover last week gap down, and the reaction took shape at a key technical level, which is at 184.95. So that's actually a 50-day moving average as well. So right now, the share price of Apple seems to be pretty much vulnerable to actually retest that 18th of August swing low, which is at 172.17. Then potentially, right, if we start to see a bearish breakdown below this level, it could take us down further much lower to 166.17. So that is a key support level to watch, which is the 200-day moving average. So, but all net, if this potential downside bias to on Apple, it could actually cascade down to or re-rate down towards the major benchmark stock indices, especially the Nasdaq 100, given the fact that Apple is the biggest weighted cap stock in the Nasdaq 100 as well as the S&P 500.
Now, I want to look at closer to home Asian action here. We have Tankin survey that was out this morning, the results of the Tankin survey, and corporate sentiment shows a weakening in Japan. Do you have any views on this moving forward?
Okay, so I think it's the Japan data overall. Yes, we've seen today's Tankan survey came down by a tad bit below expectation, but overall there are still some positive signs of Japanese economy that is still pretty much resilient in light of this higher interest rate environment globally. So consumer sentiment is rather still robust. And you look at the services PMI data is still pretty much healthy, holding above the expansionary level of 50. And all in all, it seems to me that, and do not forget, there's this also, I would say that it's a more of a reverse psychology kind of impact towards the Japanese consumer and the corporates. Because if you look at last weekend, over at Saturday or Sunday, BOJ Yuda, the current governor, actually made a kind of more contrasting, surprising, hawkish comment talking about this quietly exiting from BOJ current stance of ultra dovish monetary policy. So that will kind of give a bit of confidence that BOJ has start to realize that that deflationary spiral route that gripped Japan for the last 10 or 20 plus 10 plus year or so has more or less been abated. And right now there is more signs of a inflationary pressure coming into Japan, allowing the CPI to actually be more sticky above the 2%. So that could actually boost sentiment from a sentiment perspective and allow corporates and consumer to actually start spending right now in terms of borrowing. So just in case if they keep on delaying corporate expenditure, they may get it at a higher interest rate.
Now then, I want to swing over to what investors are looking for tonight. US CPI data. What should we be watching out for?
Yes, so definitely right. Let me talk a bit more about this US CPI data, which is pretty much pivotal because it actually definitely impact Federal Reserve policy, which could actually impact the whole world. So the thing about market consensus right now about US CPI on the we call it on the headline number, that means that's including energy and food prices. Market is expecting a slight increase. So the CPI month on month for August is expecting to come in at 0.6%. The year on year is expected to come in at 3.6%. But however, the core CPI stripping off this energy and food prices, the year on year is expecting to come in a slight tad below last month of 4.7. So they're expected to come in at 4.3% year on year. So if that core CPI starts to dip down much lower this time around, it will be 5 consecutive months of growth decelerating in terms of core CPI. So that actually by right should be positive for US equity, because given the fact that it actually addressed the case that what market is expecting, the Fed is
Mhm.
more or less has done deal with his interest rate hike cycle, and at most one more hike before 2023 ends, which is in November, pencil in November right now, close to a 40% chance, as indicated by the Fed funds futures pricing. And potentially we may start to see the first cut to come in June next year. But one thing I want to highlight very interesting over here is that there's this nowcast forecast being calculated by Cleveland Fed. So they have this nowcast US CPI forecast as well. So what is this nowcast? Nowcast is actually taking into account of the updated live component of the CPI basket. So definitely,
Okay.
oil prices has a huge impact on it, given that we start to see a 20% jump in oil prices in the last 2 months. So what's interesting over here is that this US CPI nowcast by Cleveland Fed actually put in a picture, the latest update, which is yesterday, higher than consensus for all the core and the headline CPI. So one example is that the nowcast is having the month-on-month August CPI forecasting at 0.79%. So that's above the consensus of 0.6%. And even the downbeat core CPI, as forecasted by consensus, the nowcast is actually having it at 4.46%, above consensus of 4.3%. So right now, right, given the updated nowcast, which tends to be much more, we call it much more updated due to the live prices of the US CPF basket component, especially oil price. CPF numbers right tonight may came in hotter than expected. That means there's a chance of it. So if that takes place, right, the US 10-year Treasury yield may continue to inch upwards after trading sideways for the whole of this week to the north of around 4.4%. So if that's the case, that could actually add further downside pressure on the benchmark US stock indices for tonight. So to me, I reckon it's going to be a pretty much volatile session later on.
Okay. On that note, yep, that's something to watch out for. Potential volatile session tonight. Thanks for your insights, Kelvin.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, Senior Market Analyst at Oanda on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this interview on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.